Hello everyone, this is Martin and welcome back to another thought-provoking rendition of the weekly forecast. These are the trades that I'm looking at, or the currency pairs I'm looking at for trading opportunities in the coming week, October 10th to the 14th. Now, part of the theme for this week, and will most likely carry on for the rest of this week, will be the British pound. We'll have to take a close look and keep an eye on the British pound. So it was last week when the British pound took a major surprise hit to the downside, and for most traders, I think a lot of traders out there were thinking that the bias was to the downside to begin with because of all the Brexit news and information that was coming out with regards to England, even though the British pound had been trading sideways for quite some time. But eventually, a lot of people thought that the currency pair would trend lower. And all of a sudden on, I believe it was a Thursday evening, and during the Asian session, while the Asian markets were alive and kicking, I think around 11:30, something happened. Something went really crazy and wild, and the British pound dropped like a huge stone, about 6%, or at least 600 pips in just a couple of minutes. And I'll give you my take on it as we cover the pair, okay? And we do want to, while we do this video, as we get to the British pound, I'll tell you what I think some of the reasons are as to why this happened and how it can affect some of the other currency pairs as well. So let's start again, as always, with the Euro USD. So here we have the Euro USD, and up until last week, and most of last week until at least Tuesday, price had been trending sideways, really going nowhere, contained within the upper and lower trend lines of this huge triangle. So basically, when we see price going sideways, we're talking about a consolidating market, and we're just waiting for either a breakout to the upside or to the downside. Then last week, all of a sudden on the Thursday, you see with this big black bearish candle, price not only closed below the 50 SMA, but also closed below the 200 SMA. And then all of a sudden on Friday, most likely tied into the good news from the non-farm payroll, price went down lower, then bounced right back up, and again closed up in this kind of a neutral zone between the 50 to 200. You see all these moving averages converging together, so it's just basically telling us that price is going sideways. I would not do anything with this pair. I mean, you can watch for a breakout above this area, above the 50, if you want, but it's best to just wait until price either comes higher and then does something here at the upper resistance area of this trend line, or down lower and breaks lower. I mean, my bias basically is to the downside, but again, we just have to wait and see what's going to happen. So right now, price is still below the 50, but remember, all of the moving averages are consolidating together. So there's not much to do here except just wait for further evidence. Okay, now we get to the British pound USD. This is the big story for last week, and could be a big story for this week as well. Okay, now last week in my video commentary, I said that we were looking, the bias was to the downside, and we were basically in a seller's market. And I said, and I specifically said, look for a break below 128.90. So I'll put my crosshairs on that. There's 128.90 right about there. And look what happened. I mean, the great thing is this trade here, if you would have gotten in, was a blessing for those people that perhaps got in early and were counting on a drop in price to break this support area. However, it could have been bad for any traders who kind of were here waiting for price to go up. Now, I did say in my last week's video that my bias was to the downside, wait for a break below the 129, the 28.90. Okay, so I was correct about that, but look what happened. I mean, this price just dropped like a stone, and this is the daily chart, and you can see here, I mean, it actually went down 700 pips, 700 pips before bouncing up. So what I think happened, first of all, it did happen in the Asian session on the Thursday evening here. That's Eastern Standard Time here in North America. And there are a lot of theories, was this a conspiracy, or, committed by some rogue traders, large hedge funds, or whatever. Did the UK government itself, or the UK bank system, do this, cause it to go down like this, just to make a couple of $1 billion back as it went up higher? And the other thing is, some stories are circulating that because of an algorithm, computers in the Asian session, they look for any type of bad news related to Brexit, and some sort of news caused the computers to trigger sell, and that's what happened, and then recovered before just going totally downward in a downward spiral. So you take what you want from it. It's more fun and games. Every now and then currency is going to do something like this. I mean, the last major currency who crashed was the Swiss franc, and that happened as well. You can Google that story. The Swiss franc also crashed, and that actually crashed by about 1,000, 1,200, 1,500 pips. So this was mild compared to that story. Anyways, what do I see here? I see here perhaps price stabilizing. Stabilizing a little bit sideways, but we could have some more downward movement in the short term before price comes back up and maybe stabilizes it a bit again. So again, this pair is very volatile. I would not take any trade. I mean, if you're going to take a sell trade, then make sure you have a tight stop as well, because I mean, there could be a lot more volatility here. So I don't really have any huge high recommendation, except waiting for price to come down much lower, then looking for a reversal to the upside. I just expect a lot more volatility. However, the good news is you certainly should be looking at British pound cross pairs, and we'll talk about that in a moment for some good trading opportunities. Okay, so that's the British pound. Now we come to the Australian USD, and last week I said price would most likely go a little bit higher. It did go higher and then came crashing down, like a lot of these pairs that are hitting resistance or support. Here we see resistance and the upper trend line, which depicts a rectangle here. And so I kind of I kind of think that price on this is a wait and see situation. My bias is to the downside. My bias is to the downside, but you just never know. I mean, look at this on Friday. Price really didn't go anywhere. And so right now we're kind of stuck in this sideways triangle consolidation. So I would kind of wait and see again. You could wait for a sell below 75.50. Let me get my cross here. Below 75.50 is around, yeah, it's right around here. You can look for a sell trade. If price goes down further, then you can look for a sell trade below 0.7550. Again, short-term pips though, because again, you can see the 100 moving average and this long-term uptrend line right here. Okay, although if price breaks this area, price then most likely will come back down to the 200. And again, look at the far left. We've got a major swing low right over here as well. Although here is let's just draw this in for a second. I'm going to draw in a key support area. Well, you can see, so there's a confluence. The support area right here, you can see swing low here, swing low here. This is a demand zone. As well, you can take a look at the 200 SMA. So it's all consolidating together. So price could actually come back down to about here, or price may bounce up here and again just continue going sideways. Again, wait and see. Okay, and on this one, we want to take a look at the LEOD chart. You can see here price is just going sideways. Price is contained within the upper and lower yellow line. So again, once it's in this area, it's no man's land, and you just want to wait for a breakout either to the downside or to the upside. So don't hesitate to take a look at the LEOD chart and compare it to your price action charts. This often gives you much more clarity. And here you can see the RSI is below the sentiment. The yellow is the sentiment line. So sentiment is toward the downside. Again, it's just to wait and see if price breaks down lower. If it does, it could definitely come to at least this previous swing low right here. And again, give you an opportunity for at least 90, 100 pips, perhaps even more. Okay, now we want to take a look at gold, because you see on this was the, see how price came down and kind of just went sideways. The Australian currency is tied in heavily to gold. You can see gold has been plummeting and appears to, at this point in time, it could go sideways a bit, but here is a major support area. So watch for gold to break this. If gold breaks this, it's going to go down a lot lower, down to at least the 1200 level, or price could bounce up higher, and then and if it stays above the 200, you can possibly take a buy trade to the upside. So again, take a look at gold and how it compares to the Australian dollar. Okay, so now we move to the New Zealand USD. This could be a pretty good pair to trade here. In fact, we're in a seller's market. Last week, price closed below the 50 SMA, kept dropping. And again, you can see the MACD here below. The MACD, which is the blue line, is below the zero level, okay? And it seems to be gaining momentum to the downside, which is pretty good. So watch for a break of this support area, as well as the 100 SMA. So look for a break here. And if it breaks, it's got a long way to go to the downside. We could be looking at another 150 pips or more. Okay, so this could be, there's a lot of open territory here to the downside. So just keep that in mind. Okay, yeah, I did want to mention last week in my weekly video, I did say watch for a break of the 0.720, which was 0.7. right about there. I said I did mention that price would most likely head down lower and watch for a break of this 72.20. And if you would have done that, you would have made some pretty good pips, depending on where you took your profit, anywhere from 40 to 70 pips. So right now for this week, again, it's sitting at the 100. So again, wait for a break to the downside, or wait for price to go up a little bit higher, then possibly look for selling opportunity. Okay, you can look at the LEOD chart too, and you can see here price broke on the New Zealand USD daily. Price broke to the downside below the yellow line here. Would have taken an entry right at the next candle. You would have made some pretty good pips. And your stop loss right now is right here. You see this little dash red line. Your stop loss is above here, but as price continues going down, obviously you're going to be moving your stop loss. So there's lots of room to go to the downside. Again, I'm just going to use the crosshair tool. Right now price is here. If it continues going down, the next swing low is right here. So we're looking at 179 pips. Okay, and again, it's not that far from the 100. So I think this pair's got, this could be one of the better opportunities this coming week. Okay, now we get to the USCAD Okay, here we have the USCAD, and this pair actually did something quite interesting. Do you remember I mentioned that the non-farm payroll was coming out on Friday, which it did. And what happened on Friday? You can see price just jumped up by quite a bit on the USCAD pair here, and that's despite the bad economic news from the non-farm payroll for the United States. So the employment news was terrible, but well, I'm not saying it was terrible, but it wasn't good news, and it wasn't what they expected. At the same time, the Canadian employment news was actually quite the opposite. It was quite good. So here we have good Canadian employment news versus bad American employment news. And what happened? Price still shot up, and here's the reason why. This pair is really heavily tied into the price of oil. So the reason why this pair went up higher and actually broke above the 200 SMA, we would have to take a look at the oil chart. Let's take a look, and you can see on Friday, after 1, 2, 3, 4, 5, 6, 7 up days. I mean, the price of oil was just on an up tear, wasn't it? And finally hit a resistance area, which if you go to your far left side here, you can see resistance areas here, and prices bounced down low. But because oil, it was a bad oil day for price, that is the reason why. Let's go back to the US CAD. So the US CAD is the opposite. So US strength because of Canadian weakness. The Canadian currency is tied into oil, right? So when oil goes down dramatically as it did on Friday after 7 huge up days, then this caused the opposite effect. So the US currency against the CAD went up higher. Now, the interesting thing was the bad employment news from the US did provide the what we thought would happen with the other currency pairs. So US against the Japanese yen and the US currency against the Swiss franc. So US, when there's bad news from the US, then obviously the Swiss franc and the Japanese pairs would benefit from that. So we'll take a look at that in a second. Let's see, do I have to look at anything else? So basically, in summary, what we're saying is oil trumped, when I say oil, that the price of oil and news that came out for oil trumped whatever news came out for the employment figures. And so I guess the lesson here is always pay attention to the price of oil when it comes to trading this pair, regardless of what you see with other news. Okay, now we get to let me just get to the US Swiss franc, and here you can see, yeah, on Friday, the economic news from the US wasn't that good, and this pair responded as it should have, which was Swiss franc strength against US weakness. Okay, and that's why price came down. It was quite a bit. So this pair basically has gone up, down, up, down. I still kind of think I have a bias to the upside on this. Okay. And the reason is prices above the 50 SMA. You can see that right here. The blue MACD line is above the 0 level, so we are in a buyer's market. So we're looking for price to continue higher, except let's wait for a pullback to complete itself. So price may come back down all the way down to the 100 or down to this area. Then we're looking for a reversal to the upside again. So again, waiting for a pullback, swing pullback, waiting for it, then looking for one good bullish candle to the upside before we can get in again and possibly expect price to go higher. Okay, so my bias is to the upside on this. And now again, I switched to the H4 chart. For the end of day traders, that means if you are taking trades at the end of the day and then closing your computer down and taking a look again the next day, your longer term traders, a good strategy would be to take a look at your 4-hour charts every 4 hours, and you can see we are in a major pullback. I expect price to still keep coming down to this area right here, and then you want to look for a reversal candle to the upside. So using the benefit of using the H4 chart is that you get in at a trade earlier than if you're just looking for the daily candles to close. Okay, so again, waiting for the pullback to complete itself, waiting for the candles to come down a little bit lower, just like here. Take a look here to the left. So see, pullback, price comes down to a support area, support here, in this case, the 100 and 200. Same here, except we have a consolidation this time. The 50, which is very strong. We've got the 200, the 100, and the 50 all coming together. So again, we could look at this kind of scenario. Okay, and if it breaks a little bit lower than that, I've already drawn in this trend line. You can see the this trend line here in green. That also is acting as support. Okay, so we're going to look for this kind of scenario. Even if you see one white bullish candle like this, I would probably get in and take the trade, or wait for price to come above this is the 21 moving average right here. So you're looking for bullish evidence to the upside. Okay, and our final pair, let's take a look. We are at the US Japanese. And again, you can see last week we had actually, like, look at this, right from this triangle consolidation. Price bounced up from the bottom of this huge triangle, okay, as well as, let me just extend. I'm going to extend this right here, okay? So you can see this is a support zone right here, the trend line, and price. The amazing thing is, I'm just going to zoom out a wee bit, and this is significant, everyone. Okay, let me zoom out. This, you see this upper trend line right here in green? Price had been contained below this trend line. You see here, 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 for a long time. And in fact, this trend line starts at around the beginning of January of this year. So price had been in a downward spiral for this currency pair, the US Japanese yen, and all of a sudden, take a look right here, you can see we had a breakout to the upside above this long-term trend line. And that's exactly why I love trend lines, especially on longer-term time frame charts, okay? They do act as resistance, and you can see price broke above the trend line. If you would have gotten in right there, you would have made some pretty good pips. Let's take a look. Good for at least 100 pips or so. Okay, so that's significant. So price now, for price to continue its uptrend transition here from being in the seller's market to now we're in a buyer's market, also shown. You see this blue MACD line? Once the blue MACD line hits above the 0, we are in a buyer's market. So we are in a buyer's market, but we gotta look for this retracement. Price is now going to retrace back again down somewhere here. And again, you're looking for swing, pullback, then looking for evidence to the upside, looking for one good white bullish candle to bounce off of support, and then you want to take a buy trade. Okay, so my bias is to the upside, but wait for the pullback to end, and that should be good to go to the upside. The other thing is, of course, you can look to sell below the there's a counter trend below the 102.66, which is 102.66. Actually, yeah, counter trend right now. So below 102.66, sell trade towards the next major support area before price bounces up. So short-term counter trend, if anyone wants to do that, they could try that. Again, it's a tentative downward short-term sell trade, or just wait for price to come back down and then look for a reversal to the upside. And as I mentioned, the really good cross pairs to trade, I think you should open your charts, get them ready, look at the British pound cross pairs, really significant. There could be a lot more opportunities than some of the other ones. Also, look at the euro cross pairs. Euro seems to be getting stronger, a little bit stronger. New Zealand, just for your own information, the New Zealand dollar seems to be getting a little bit weaker along with the Japanese yen. So look for Japanese yen cross pairs, New Zealand and euro cross pairs, as well as keep an eye on the British pound. Okay, so that's it for this week. Happy trading, everyone. Take care, and we'll talk to you again soon. Bye for now.